we've seen gradual expansion of on-farm storage.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a pleasure to visit with you. Well, today I'm honored to have Tanner Ehmke with us. Now, he is the lead economist for grain and oilseeds with CoBank. He hails from Denver, Colorado, and we have him on from time to time to talk about ag issues out in the plains and in general across the country. Tanner, good to have you back. Hope you're doing well this new year.
Great to be back, Marlin.
Let's talk about the setup for this coming growing season. I mean, now here we are. We're just 2 or 3 weeks away from the big Ag Outlook Forum. They always do projections for what they expect acreage will be across the U.S. for corn and soybeans and, well, I guess wheat for that matter, and what kind of production we're looking at. So that kind of leaves things up in the air right now. I'm picking up here, Tanner, that a lot of folks are leaning toward a lot more corn acres this year. What are you hearing in that regard?
I'm absolutely hearing that consistently wherever we go. Obviously, corn prices have done a better job in holding their value onto the upside versus soybeans. And really, when you look at any other crop, it's the same story, whether you compare soybeans to corn or wheat to corn or cotton to corn. You name it, every crop is probably going to lose some amount of acreage to corn, and so that's why we're a little bit more aggressive on our upside on our forecast for corn acres this spring. The latest model I ran on corn acreage is 94.8 million. Last year we were just above 90 million acres, and so I'm looking forward to something a lot bigger than that. USDA had previously put out a number back in November in their baseline projections that we would see corn acres increase to 92 million. And I think USDA would absolutely increase, would show an increase yet again in the Ag Outlook Forum. But it's consistent. Corn has had a good run here on prices versus the other commodities. Now, that doesn't mean corn is going to be guaranteeing a profit for a lot of farmers. Costs are still high. But if you're a farmer that's looking to farm for margin, and you have some acres that are available to shift out of your crop rotation, corn is absolutely going to be a consideration just because of the price performance. So when based on the price ratios, corn is absolutely showing that we're going to have a trend towards an increase this year, and it could be potentially a very big increase.
One thing that keeps popping into my mind is I was always told when I first got started talking about commodities years and years ago that the market really will not rally until the majority of the crop is out of the farmer's hands and into commercial hands. Mm-hmm. And yet here you talked about that big rally we've had in corn. I mean, surely they don't already own that much, do they?
When you look at the CFTC reports, it's clear that the commercial participants, we're talking about end users and merchandisers, that whole community that actually touches a bushel, they've been their short position has really been growing, where the speculative position has really been, the speculative long position rather has been growing. So what's happening is there's a transition of bushels here, where the end users have been buying bushels physically, and of course, if they're going to own the physical bushel, then they've got to short it in the futures, and that's being reflected in the CFTC report. What's being the other story that you're hinting at there, Marlin, is that the farmer is selling. The farmer has been selling on this rally, and you're seeing that transition of bushels showing up on paper there. What is going on here? If you're seeing farmers actually selling, wouldn't that be reflected in lower prices? Well, what you're seeing is a very resilient demand story here in terms of exports, and really, we can thank Mexico for that. Despite the fact that we have a very strong dollar, Mexico has continued to buy from the United States. End user demand here in the United States has been strong. We've got feed usage up. Ethanol demand has been strong as well. Although we've got some signs that that's going to be tailing off here because ethanol margins have been coming back a little bit. But also, we can't not talk about what USDA did in the WASDA report here. It's been a couple weeks now, and that's still a story that's being played out because if you remember what USDA did, they really pulled back on the size of the crop, and that shrank their end stocks forecast for corn back to just a shade above 1.5 billion bushels. We're no longer over 2 billion anymore. That's a remarkable change from where we started out. And the reason for that, most of the reason, was because of the dryness of this crop. Ear weights were down. Okay, and so there's less water literally in the bushel, and so you have fewer bushels being weighed there. And so as a result, that really tightened the balance sheet on corn at the time when you've got very strong end user demand, and exports have been surprisingly strong, especially to Mexico and some other countries. Countries like Colombia, for instance. We can talk about Colombia here in a minute, and the trade wars. So right there, corn has had a surprisingly bullish story that surprised me. I didn't see it coming. I didn't see the recovery in corn prices lasting as long as it has. And so when you walk back into it, yes, corn has got absolutely the story here fundamentally to support where we are on prices. And that's going to drive more acres to corn this spring because really it's the only crop right now that's got the price potential where farmers can actually lock in a more profitable margin versus soybeans or wheat or cotton. So with that in mind, when you look at the price ratios going back decades, and you model that out in a regression analysis, which is what we do to try to drive our thinking, there's a clear indication that we're going to see more corn acres. And the number I'm at right now at this point in time is 94.8 million acres on corn. That will change if we see the price relationships change. There's a lot that can happen between now and spring. And so, but at this point in time, that's where we're being directed.
A lot of producers and, well, analysts too would argue that USDA artificially suppressed the prices for many months when a lot of people were saying, the numbers are too high, they're too high, they're too high, that it's not there. And then after the harvest, then they finally come out and say, all right, you were right, the numbers weren't there. That's kind of a tough argument.
I wouldn't fall into that camp of making an accusation of USDA. They do good work. They want their work to be relevant. When the data comes in, they adjust, okay, and they pivot. They can't try to project too much bias. They got to go off of what they have because their job is to provide the most reliable data they can. To decision makers when it comes to farm bills and farm policy, things like that. Their data has to be reliable because that really is their number one stakeholder. And so I wouldn't fall into that camp that was artificially suppressed. They don't want to drop a bomb on the market like that. If they have new data and they say, look, the ear weights are coming down, look at the stocks data, look at the inventory data on December 1st, then they back into the numbers and they say, wow, something's different with this crop. We can definitely say that we need to recalibrate how many bushels came across the scale. And they can back into the acres that were, by state, and they can say, okay, we can clearly see by state the stocks data didn't come in as we anticipated. What happened? Well, clearly it was air weights, and clearly there was less water in the corn bushel, and so as a result, then they finally back in. But they weren't able really to come to that definite conclusion until they had stocks data in on December 1st, and that data is not reported until January.
Why do you think Mexico is buying so much corn this year?
When you look at the stocks to use around the world, Marlin, we're tight on corn. Believe it or not. Corn and wheat both. We can talk about wheat here in a minute, but globally, we are not swimming in surplus bushels. Here in the United States, we have surplus bushels, exportable bushels, and a strong dollar. But around the world, we are quite tight. And the reason there is that we've had some smaller crops around the world where there's some question marks on how big the Argentine crop is going to be. There's some question marks on how big the South American crops are going to be because we haven't planted the safrinha crop yet. It's been drying down in Argentina. And so as a result, at the same time, we got to talk about usage. Usage has been very strong for biofuels, for feed. Okay. So globally, we are tight on corn. So Mexico doesn't have an abundance of opportunity to divert away from the United States, to pivot that demand to somebody else. Plus, we're the next door neighbor. It's a very simple trade in terms of putting corn on the rail and sending it across the border into Mexico. And so it's going to be hard to replace the United States with the ease of that trade, even with a strong dollar and other headwinds that we have, trade uncertainty with the United States. That's a very simple trade that's hard to replace. If they're going to pivot away from the United States, they might go to Ukraine, and they've had production issues there. It's been very dry. They could pivot to Argentina again. It's been dry down there. Plus, trying to load corn onto a vessel, move it across the water, unload it onto the western coast of Mexico onto a rail and ship it inland. That trade is not so easily done as also. And at the same time, Brazil loading corn on the northern arc. You got to ship it north through Mato Grosso, up into that northern arc onto a vessel, ship it through the Panama Canal and up around. So those are complicated logistics, more complicated than it is importing corn from the United States. And so that's why the United States has still maintained a very strong export base into Mexico.
Well, here we are with nearby corn, roughly about a dime or so under the $5 mark. Do you think that we'll be able to look at a five handle on the new crop corn?
I think it's obviously within the realm of reason we could get there or above. I've heard, commonly that corn is going to trade in that 450 to 550 range, depending upon what happens with weather, depending upon what happens with trade uncertainty, depending upon what happens with South America. So we're gonna be in that range, and I fully anticipate if the demand picture holds together, then yeah, we could see corn continue this story of climbing to the upper end of that range. But again, we have to maintain the demand here in the United States. There's some concern here that we could see biofuel demand start to pull back a little bit because margins have been coming off because of tight corn basis in the country, because of rising natural gas prices. Fuel prices have been coming down. We've got Trump really pushing to expand more oil production here in the United States. We've got growing oil and gasoline production, and so as a result, you're going to see downward pressure there on energy prices, and so there's some question marks on the durability of our ethanol grind. We've got some concern about feed usage. You've got the New World screw worm, try to say that fast, limiting the amount of cattle coming into the United States. And so there may be some question marks on the durability of our feed usage here in the United States. And of course, we've got bird flu we're still dealing with. So sounds like hogs have been a positive story, but we'll see what happens there. But the feeding margins appear positive there, and so some concern there. Really, I'd say with cattle and the durability of on the feed demand there. And then, of course, exports. We'll see what happens there with trade uncertainty. We had that very fast and brief trade war with Colombia that lasted all of a few hours on Sunday. We could be back at it again, and Colombia is a very important export destination, especially for corn. They're the number 3 export destination for the United States. And so, just over 4 million metric tons of total export commitments. So they're important. We don't want to lose them as a customer. And so, a lot of positives here, but it's, as they say, it's cautious optimism. It's a it's a word salad that gets a little overplayed, but you never want to get over your skis on the bullishness of the market when you've got a lot of these uncertainties that could threaten the durability of that demand story.
You know, you have posted some interesting things on social media, and one was in regard to this potential high acreage of corn this year. Okay, let's say we do have 95 million acres. Are we going to have enough room to store all that?
Right. Well, first of all, you have to assume normal weather. We have to throw that caveat out there. With 95 million acres and normal weather, that's going to put you with an index stocks well above 2 billion. And so, we're going to there may be some choke points along the supply chain. We would see corn piled. We have expanded bunker storage around the United States. That's a cheap form of storage rather than building silos, which are much more capital intensive. We've found ways around this to store corn and tarp it and things like that to try to piece together temporary storage where we've seen a reluctance of the industry to really go after expanded corn or expanded grain production, expanded grain storage. When you look at the latest numbers that came out in the grain stocks report, they report these every year. It's at the bottom. You got to scroll all the way down to the bottom of the report. And it shows you how many bushels of storage we have around the country. We've seen gradual expansion of on-farm storage. Okay. Commercial storage has basically flatlined. Now, we have not seen a lot of investment there for net growth. Now, we're always going to see new expansions around the country in the retirement of older facilities as grain merchandisers and elevators consolidate operations. You may have some single country elevator locations that are inefficient and too costly, and so they shut those down and try to divert more of the traffic over to a central location that's much more that's faster and more efficient. And so net we've had we're flatline on commercial storage, but on the farm though we've seen a gradual increase. Okay, so that's the other workaround here. If we have a record crop, fast forwarding to this fall, in theory, a record crop. What that would mean is that we're probably going to see farmers utilizing more on-farm storage and more temporary storage, like bunker storage or even ground piles. And then you just throw some tarps on it and you keep it dry, and that's how you move it.
Is on-farm storage paying for itself pretty well lately or not?
More so than it was in prior years. You got to look at the carries. You got like the spreads between new crop and old crop, or old crop versus new crop rather, or just look at the spreads in the nearby versus some other deferred crop or deferred contract. And we've seen a return of the carries. However, that is narrowing here of late because of corn's demand story has been quite strong. But when you look at the spreads versus this crop versus previous years, we're now back to where it is profitable to store. In prior years where we were short on production and strong on demand, the market was penalizing storage. And so there was no incentive there to expand storage because the market was going to penalize you. Plus the cost of borrowing money was higher. So if you wanted to build new storage, it's going to cost you money to do it, or cost you more on interest expense. The labor to do it is more expensive. The cost of materials was higher. So there's a whole host of factors here that really delayed the faster expansion of storage. And then you bring into the lack of carries in the market. Now we're back into an environment where the carries have returned. The Federal Reserve has cut rates some. And so that's made borrowing a little bit more feasible for those interested in expanding storage. And we're seeing inflation come down, especially when it comes to your raw materials. Inflation isn't what it was, whether you're talking about cement or copper or those raw materials for construction projects. The inflation has slowed down there as well. So now there might be renewed interest, but we'll see. I mean, I think we need to see a lot more interest with a record crop. I think would be what would do it. You get a record crop would build those carries back into the market and bring back some more interest in storage.
Well, if everything really favors production of corn this year, what do you think about the soybean side? Are we just going to be squashed with production out of South America?
There's some other factors there. Obviously, record South American crop would deter an expansion of soybean acres here. I'm looking at an 83 million acre crop right now for soybeans. Again, that can change. It's down from a little over 87 last year. And so I think that's in keeping with what a lot of people are anticipating. And when you get into the details, is it going to be 83, 82, 84? There's going to be some arguments to be made there, but absolutely the trend is towards reducing soybean acres in the United States, and most of that is because of the record crop we are currently anticipating coming from South America. That being said, there could be some policy changes that could incentivize soybean acres, or at the very minimum, reduce how much is lost. For instance, if we dramatically reduce the amount of veg oils or used cooking oil flowing into the United States, that would put more incentive on the market to add more soybean acres into the United States. And where would that come from? That might come from a trade war with China. That might come from tariffs on used cooking oil coming from China, or canola flowing in from Canada, or tallow flowing in from Brazil or Mexico. And so those factors there could actually change the calculus. And so if we reduced the amount of veg oils and fats flowing in the United States for the production of renewable diesel, that would put upward pressure on soybean oil prices, and at the same time put upward pressure, therefore, on soybean prices, and therefore incentivize more soybeans to be planted this spring. So right now, I'm looking at an 83 million acres on soybeans, but that could change with the stroke of a pen and a policy change.
Is there any hope for the wheat? I mean, you're out there kind of on the High Plains region there, and I tell you what, the wheat has just been dragging the bottom of the barrel for a long time now. However, I will add that it seems like there are some problems with the Russian wheat crop this year. Does that provide
Wheat
any hope for that market?
wheat has been the big head scratcher here. Excuse me. You mentioned Russia. The Russian crop appears to be in trouble. The latest crop ratings there only put about maybe a third of the crop in good condition. Otherwise, it's been very dry in Russia. It's also been very dry in eastern Ukraine. We've had the frost issues here in the United States. Some concerns about winter kill in Kansas, especially. And so, what is going on with wheat? Well, I'd say you've got a few things that have distorted the picture here. First of all, let's go back to Russia. They've got a very weak currency, and so that sets a lower bar on their exports in terms of price. Although their export prices have been trending higher, we do need to keep an eye on that. Then, of course, we've had bigger exports out of the southern hemisphere. Australia had a bigger crop. Argentina had a bigger crop. And so the southern hemisphere export story has really depressed world prices because those two exporters have come out with more bushels. And so that's holding down global values. Then, of course, we've got a strong dollar. And of all the crops that are affected the most by the strength in the U.S. dollar, it's wheat, because wheat has more world competitors than corn or soybeans does. And so when you have a strong dollar, that's going to have more of an effect on wheat prices, more so than corn or soybeans. And so those factors, I'd say, really have been causing this disappointing story on why we've had such low wheat prices. But all of this could change quite quickly. It's getting a little old to be saying this, but we got to keep an eye on what happens with wheat, because I'm hearing it more and more often. Other forecasters are saying they think wheat is a sleeper. Wheat is really going to wake up here pretty quick, and when it does, it could be quite a shocker, really because of what's going on over in Russia. And when we find out that crop is probably going to be under 80 million tons, that could shock the market. We also have to keep an eye on what's going on in Russia, or excuse me, in Europe. They've had some growing condition issues over there as well, but that's starting to look like a more favorable condition, especially with France. Conditions there look to be improving a bit, so that has to be in the balance. But I think Russia is really in the driver's seat right now. And once we start to see that crop come to market, and if it really is proven out to be a crop less than 80 million tons, then I think wheat is going to absolutely wake up, and it's going to be a different story.
Well, Tanner, thank you so much for joining us and providing your insight into what's going on with the grain markets around the country. I appreciate that. That's Tanner Ehmke of CoBank in Denver, and that'll do it for this episode. Thanks again for joining us. For producer Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.